Hi, everybody. This is Chris Roger with Bayntree Wealth Advisors. I am one of the financial advisors here, and in this quick video, we're going to be going through investing basics and different types of investment vehicles that are usually available to you inside your 401k plan. So what is a 401k, bond, stock, ETF? How do they work? So I'll go through the different types of investment strategies that are most likely available with your plan. So with a 401k is an employer-sponsored retirement savings plan. So you can defer your own compensation from work, and if it's a traditional plan, that money that you defer into the plan, you don't pay taxes on. So normally if you earn $1 at work, you don't receive the full dollar. Let's say you receive 80 cents because you have to pay taxes and so forth. So when you put money into a 401k, when you earn that dollar, that full dollar goes into the 401k plan, and you don't pay taxes on it today, but down the road when you want to take money out, you pay taxes on it. So that's very high level what a 401k is. Now, what can you do once the money's inside your 401k plan? There's different options: stocks, bonds, ETFs, and mutual funds. So stocks are pretty simple. You guys, most of you probably are already familiar with this, but when you buy a single share of stock, you become, an easy way to think of it, as part of an owner in that company. And as that company performs and grows over time, you participate in that growth. Now, stocks generally have more risk than bonds do. Bonds work a little bit differently. A bond is essentially a loan between you and another party. It could be the government, it could be a corporation, it could be a municipality, but you are loaning an organization or an entity money, and they're paying you an interest on your loan. And that is your dividend that you're getting, or your coupon, sometimes it's called. So you're getting your coupon, and then when the bond is up or reaches maturity, these terms might be familiar to you, you get your principal back, hopefully. Now, there's different types of bonds. There's U.S. government bonds, there's corporate bonds, and the risk that comes with different bonds is going to vary. So be careful with some bonds act a little bit more like stocks. So you just want to know the type of organization you're looking at if you're buying individual bonds themselves. But with the 401k plan, you're not going to be buying individual stocks and bonds. You're going to be using ETFs, which stands for exchange traded funds, or you're going to be using mutual funds. An ETF is a basket of stocks or bonds. So instead of going out and buying Apple stock, you can buy maybe a technology ETF, where instead of buying just Apple, now you're buying sectors of the market that only focus on technology. Now, ETFs hold not just one stock, but they hold very small pieces of hundreds of different stocks. So that allows you to have much more diversification, and you don't have to go in and try to build your own type of portfolio and plan and do all of your research on your own. You have the ability to buy different sectors of the market, internationals. You can buy short-term bond ETF funds. You can buy long-term bond ETF funds, and so on. So ETFs are always going to hold the individual positions inside of this managed shell. They're not going to sell and make changes. If you buy a technology ETF, it's not all of a sudden going to be later a bond fund. It's going to stay in technology because that's what the ETF objective is. Now, a mutual fund, which is also common in a 401k plan, works similar to an ETF, where it'll hold many different stocks or bonds. So again, the mutual fund usually gives you a little bit more exposure to one sector as opposed to just an ETF, meaning it can hold more positions, so it provides more diversification for you. Now, a mutual fund, one of the key differences, you have the ability inside of that fund, the managers can go in and make changes. So if you're invested, say in earlier this year that you were invested in a U.S. stock fund, some mutual funds have the ability to make changes when markets make change, which can help your investment performance over time. So stocks, bonds, mutual funds, ETFs. How do I know which one works best for me? So it's going to be contingent on a couple different things. Do you want to be very hands-on, or do you want to be very hands-off? A lot of people like to be set it and forget it. let their investments grow and do their thing. Now, with 401k plans, you don't have the ability to go buy individual stocks and bonds. You're limited to ETFs and mutual funds. So before you go out and make any final decisions, if you're unsure on what to do, please feel free to reach out to us. Again, my name's Chris Roger. I'm one of the advisors here. I'll be more than happy to help you. Same with Jonathan Jangle and Brian Hartstein on our team here. Reach out to us if you have questions, if you want to know what you should be investing in with the 401k, or if you have planning elsewhere and you want to figure out what to do with any excess type of plans. Just let us know. There's no cost to work with us or reach out to us, and we're here to help. So thanks, guys.